It's Fed Day. That's our topic for today's Backstage Pass. Well, stocks are up so far today. Mortgage bonds are down to flat, somewhere, around flat, down maybe just a little bit. It's been a little volatile this morning so far. Mortgage rates have opened better today than where they closed off yesterday. That's right, I said better. A little bit of exciting news there. We'll talk more about that in just a minute. But first, let's talk about some more housing news that came out today. So yesterday we discussed the difference right now that we're having between supply and demand in the housing market when it's concerning new builds, right? So household formations are in about 1.7 million at an annualized pace, and the supply side for new housing, well, it's really just not keeping up with pace with those household formations. Well, today we got some news from the National Association of Realtors, and this is for existing home sales and active listings according to NAR. And let's take a look at some of this data because it again kind of talks and gives us some insight on the supply and demand side. So existing home sales, this measures closings on existing homes, show that sales were down only 0.4% in August. Now that was stronger than expectations. It was expected to be a 2.5% decline. So existing home sales for August was actually better than what was expected. On a year-over-year basis, sales are down about 19.9%. Also, inventory appears to have crested. It does every time this year. It's kind of a normal seasonal build. Inventory for August declined from 1.31 million to 1.28 million. Right now, there's about a 3.2 month supply of homes on the market, and it's still a tight supply side of things because 6 months is considered balanced. But if you look at active listings, well, 39% of the inventory that's on the existing home sales report, it's actually under contract. So that means it's not available. That means only 779,000 units are not under contract. And again, this gives us some insight into the demand in the market because what we would consider a normal market only has about 25% of inventory under contract. So when we look at the month supply of truly available homes for sale, well, we're really only at about 1.9 months. And while there are reports out there that homes are sitting longer on the market, if they're priced correctly, well, they're still flying off the shelves. Average days on market increased slightly in the month of August from 14 to 16. That shows us that, hey, if the home's priced right, it's flying, it's getting sold very, very quickly. Now on to the bond market and what's going on today. Obviously we know today is Fed Day. Big announcement today at 2 p.m. It's going to be, the Fed is going to be announcing what they are going to do with the Fed fund rate. It's expected in the market that it'll be a 75 basis point increase. And so that's what the market is expecting and looking for. The variable in the whole scenario is really going to be the speech, the press conference, and the talk Q&A session afterwards at about 2:30 Eastern. And that's going to give us some insight into how the Fed is thinking about the November meeting and what their rate hike is going to be for that meeting, if any, how they feel the fight against inflation is going, and possibly if there's some discussion about the balance sheet runoff or normalization that we've talked about in the past. So this talk or the press conference is really going to give us a lot of insight into what the Fed is thinking, and that has the potential to produce a lot of volatility later on in the day today. So right now, at the time of recording, mortgage bonds are down 11 basis points. The 10-year yield is flat. Mortgage bonds had a very, very nice recovery yesterday. So we talked yesterday, mortgage bonds were down pretty significantly. They had a nice recovery yesterday and they formed what's called a hammer formation. Today we're looking for that confirmation of the hammer formation. And what that really means is a signal in a reversal of price. It's a technical signal that the price is going to be reversing. Could be some good news. The meeting this afternoon from the Fed and the press conference, that will probably be the thing that really ignites that reversal if that is going to be the case, if that's how the bond market is going to react. Yesterday, the national average for a 30-year fixed rate came in at 6.47%. So 30-year fixed mortgage was at 6.47 yesterday. Today, we're looking at around 6.43%. So again, that's a move lower, but we'll wait and see until after the press conference today and the Fed meeting, what the markets decide to do and how they decide to react. Again, if there's anything that's super poignant that comes out of that, we will be sure to let you know today. But other than that, we're going to let you know. We'll kind of dive into some of the details of today's conference in tomorrow's Backstage Pass. That's all the news that we have for today. Remember to stay positive. Hope you have a great day, and we'll see you tomorrow.